What's up, everybody? Stacking Surfer here, back with another awesome interview for you guys. We've got Miles Franklin today. We've got Andy Schectman from Miles Franklin, president and CEO, and also co-founder. And you guys, I'm excited to have this conversation with you. It's been a few weeks since I've talked to Andy, and we've had a lot happen just in the last couple of weeks. We had a lot happen yesterday. So I know a lot of you guys want to ask Andy questions and try to figure things out. One of the things I love about bringing Andy on here is we've got the ability to do a live stream. A lot of the videos he goes on are not live. And so this will give you guys that are watching the opportunity to ask Andy questions. So I want to set a couple house rules just to help you guys and help me really be able to, to make sure we ask the right questions to Andy, or at least I can see what are questions to Andy versus just you guys having fun in the chat. So first off, if you could please go ahead and put in all caps any question you have for Andy. If you happen to be on a TV where you can't do the caps, it's too hard, and you still have a way of being able to type, put just a star or a dollar symbol or something like that to kind of catch our attention. If you happen to be watching on a TV, the other thing I would encourage you to do is to get out your phone, or if you have an iPad or a computer, and have that by you so that you can go ahead and hit the thumbs up. You can subscribe if you haven't done that yet. And then you can also hit the bell icon, as well as being able to leave comments, okay? So just a couple other quick things. On the 24th of March coming up, I'm gonna be doing my 10,000 subscriber party, as well as my 2-year anniversary. That is actually the 2-year anniversary of me putting out my first video on YouTube. And we're gonna be doing a lot of giveaways, and we're gonna have some guest appearances as well. We'll have to find out if Andy's available at that time. I don't know if he is, but if he is, we're going to ask him to come back out on that time as well. But go ahead and put your questions in there for Andy. And also, if you guys can, go ahead and recommend, send a note to any of your friends or family that may enjoy this conversation today, because we're going to hit some really important stuff. So I'm going to go ahead and bring Andy up here. So Andy, welcome to the stream. How are you today?
Good to see you, buddy. Thanks for having me, my man.
I'm glad to have you on here. We schedule these things, and then just for everybody to know out there, this is a side thing that I'm doing. For me, it's really giving back to the community for all the awesome things the stacking community's done for me. It's also a way for me to talk about a lot of my interests that my wife no longer wants me to talk to her about. So she's like, find some coin friends, go talk to some other people about the finance stuff. And the funny thing is she has an MBA, and she also studied finance very heavily, but I think she got burned out a little bit from it. So we're working on getting her back into the mix. And I know it's starting to work, Andy, because the other day I asked her, I said, for this trip we're working on, we're going to be going to Maui in June, which I'm really excited about. I've grown up going to Maui since I was about 8 years old or so. We go to Napili Bay, which is up by Kapalua. And I'm totally heartbroken with what happened a little, year ago or so. It's maybe been further than a year ago now, to Maui and to Lahaina, just being completely decimated. Luckily, my family was in a position to be able to help a few people with some rebuilding of houses, which is awesome. So I can't take credit for that, but that's something my dad was able to help with, which I'm excited about. But it's still sad out there. I think it's going to be, I think we're going to tear up a little bit when we get out there to see it. But it's something we're looking forward to and doing. And when I asked my wife, should we move money from this one account, should we sell this asset, or should I sell gold and silver, she's like, well, don't sell the gold and silver. Don't touch that stuff. And that was a good move, because it allowed me to see that she's starting to understand the importance of sound money and precious metals, and why we stack it. And I know you're probably similar to me in some of these ways, Andy. I have my deep stack, which is for passing on to my families and generations. I'm not selling it. I've got another stack that's fun collectibles that I like. I've got like a 300-gram Death Star that's silver. I'm a big Star Wars fan.
Yeah.
And then I also have a golf ball that's 12 ounces, pure silver. We're going to take that golfing as soon as it warms up a little bit.
Let me tell you
And
something that's gonna screw up your golf club in a big way.
it will. So I'm not going to use my golf clubs,
Mhm.
but we're going to take it golfing. And we're going to film that. So that'll be fun.
Better not hit it in the water, brother.
Well, there'll be a little movie magic going on too.
Right
So
on.
we're going to, it'll be in some of the shots, and the other shots, it'll look like it's in there. But anyway, there's a lot of fun things you can do with gold and silver. But I also have my stack that's more financial, which is what am I doing to grow my stack? So this might include mining stocks. This might include things, products I sell at like the Long Beach Coin Show, or it may be products that that I'm moving out of. Maybe I decided, hey, I don't want to be in that as much, and I move things around. So I also have that area. But what I'd love to do to kind of get us started off here is I wanted to ask you about yesterday. We had a pretty good scare yesterday with the stock market dropping the most it's done since I believe 2022. I may be wrong on that, and then I think it's been even further back that the Nasdaq's dropped that much in one day, and I want to say that even takes us back over a decade, but I could be wrong on those numbers. What happened, and why didn't we not see a massive drop in gold and silver prices?
Well, I think, one has nothing to do with the other in reality. Every time that happens and they say, well, it's throwing out the baby with the bathwater. It's margin accounts that need to be covered. So gold and silver are easiest sold. That was always central or commercial bank, I think, coming in and suppressing the price to kind of ease and calm the nerves, because if gold is going to the moon as the markets are collapsing, that's a bad thing. So we better knock it down. People have grown accustomed to that. I don't think that's, no one sold anything as that was happening on our end of things. In fact, things are disappearing off of the exchanges at the highest levels. But if you've been paying attention for just a little while, people should have been expecting this. And I've been saying this for the past few weeks on my podcast.
Yep.
Volatility index last week, was up for 6 straight days in a row. And since February, the volatility index is up over 45%. Well, people need to be paying attention to that. People need to be paying attention that last week I was screaming that the hedge funds, that their participation in the Mag 7 was down to a 22-month low. People need to be paying attention that, institutional capital has been rotating from risk on to risk off. Look at all the insiders that they have been a 6-to-1 selling to buying. Look at the fact that, this is actually kind of crazy that on February 20th, Jamie Dimon sold $234 million worth of JP Morgan stock, the most he's ever sold. 2 days later, on the 22nd, Warren Buffett announced that he had $334 billion in cash. And of that, I think the number was 279 billion in US treasuries, way more than the Federal Reserve holds. And then 12 days later, the NASDAQ 100 crashed 11%. Could that really be a coincidence? Do you think that, that they didn't know that this was coming? And, part of me feels that this is planned, that this is what they want. This is what Trump wants. I know that sounds counterintuitive, but he wants people to emulate what Warren is doing. Warren is selling stocks and buying treasuries, massive amounts of treasuries, which lowers the 10-year yield. Because we have just in the next 6 months, $7 trillion in treasuries that are coming due that we have to refinance. And if we refinance them at higher interest rates, it's very painful. So the only way to get the rates lowered would be to incentivize people to move from risk on to risk off, sell stocks and move to U.S. treasuries, which will then lower the 10-year yield, and then he can go to the Jerome Powell and say, you got to lower the federal funds rate to drive the short-term rates down because the economy is in trouble. That's the only way we're able to, mitigate the pain in the refinancing of our debt. But I can't remember a time where we've seen such a rapid shift from risk on to risk off. In November, with the Trump euphoria, it was massive risk on. Everyone was buying Mag 7 and Bitcoin and the stocks within the Mag 7, and as hope springs eternal. But to give you an idea, if people are paying attention, the Russell 3000, which encompasses large caps, small caps, and mid caps, if you take the average stock, you take all of the stocks and I think it's the average. The average stock of the Russell 3000 is down 30% from its 52-week high. That the Russell 3000 is a sampling of the economy, right? It's not the big Dow stocks. It's 6 times the measurement of the S&P. And if you look at the weighting in the S&P, it's ridiculous. You got 7 or 8 stocks that comprise, I don't know, 30, 40, 50% of the weighting of the 500. So when you talk about the Russell 3000, it's a much broader swath sampling of the economy. They're all down 30% from their peak. So the warning signs have been here. It's just that our media, if they're not watching you and me and others like us, they're missing all of this because they're, it's to the moon and missing what the insiders are doing. And the insiders, the smart money, for quite some time now, since the end of February, anyway, the mid to end February, have all been, exiting stage left quietly. And the fact that this isn't center cut on the newspaper and front page on any financial news station, well, that's what you get with a media that doesn't do anything but create divisiveness and spew nothing but lies, and have been for quite some time. But if you've been paying attention, this to me has been expected. And I think this is what Trump wants. He gave an interview with Maria Bartiromo, and he's like, yeah, he avoided the tough question about recession. And even though you look and every indicator is signaling recession, the SAM rule, the SOM rule, the big money into huge influx into money markets, over $7 trillion, that's record. And that's always a sign of recession, as the SOM rules predicted the last 9 recessions in a row has to do with unemployment levels rising or employment levels falling. I think it's 50 basis points below the last month or the last few months. You have the reinversion of the yield curve. All of the metrics by which recessions are measured are all screaming. And then, you have the Atlanta Fed, who just came out 2 weeks ago or less, that was just calling for a 2+% GDP growth for the year. They're now 4% less at -1.5%. They're calling. In just a matter of days, they went from 2% plus 2.5% plus projection for the year to now -1.7 or 8. So they're saying we are contracting heading into a recession. And so, to me, what we have is the beginnings of stagflation, which is the worst of both outcomes. That is a inflationary environment, little or no economic growth, higher inflation, higher unemployment, slowing economy. So you got to lower rates. That's what he'll say. And if people are scared, as that fear takes over from risk on to risk off, and we've seen this massive shift, not just from the mom and pop investors, but the hedge funds have left the Mag 7, the lowest exposure in 2 years to it. That's why you're seeing them getting clobbered. They want everyone to move into the 10-year treasury to lower the rates, to make refinancing easier, and to incentivize Powell to lower rates as well. So there's more of this to come. I would not wait for, look at this as just a short-term correction. We haven't experienced a material correction in quite some time. Every time it does, they come in and they pour more gas on the fire. And at some point, these inequities have to be paid for. And that's kind of what maybe Trump understands that and realizes that. I, for one, would be very cautious right now in this marketplace.
I second that, Andy. What I was taught in business school is anything more than a 20% correction starts to get into that category of a crash. And once you get over 30, it's technically a crash. So we've hit that, and we're kind of pulling back a little bit from it. But to me, this is much more than just a little correction that's going to come back. But to your point, I mean, today we'd rather the country and the government would rather see inflation than they'd rather see deflation. They get worried about deflation. They get worried about depressions. They get worried about a 1929 type.
And why would that be, do you think? What's the biggest reason? I mean, the biggest reason to me is that everyone's up to their ass in debt. And when you suppress interest rates for 3 decades, you incentivize debt. And well, hey, I mean, shit, I can buy that the nicer car than I wanted to because I can get 60 months 0% interest. And we can spend an extra $350,000 on that house because, well, rates are so low that we can do that. That's what they have been for a long time. Not at currently, but that's what they were for a long time at the zero bound federal funds rate and low mortgage rates. And so you've incentivized all this debt, and that works while you have your job. You lose your job, you're dead, or the economy slows down and they start making layoffs. How do you service that debt? That's why they're so afraid of a recession. Recessions are actually good things, and we've been told that they're bad. Recessions are like a brush fire, right? They're never fun, and bad things happen. People die, or animals die, and trees die. But you come back a couple years later, and the forest is stronger than it's ever been. That's Mother Nature's way of cleaning out the excess. And every time we've headed into any type of a slowdown, they've come in and pumped more money into the system and lowered rates, which just made things worse ultimately. And so one of these days, this will be something that has to fully express itself. Is this beginning of it? Don't know, but they certainly don't want a recession because it just means it's that much harder. They'd much rather have inflation so that the debt becomes easier to handle, watered down money. A recession and or depression where things slow down, that the debt just collapses upon itself. And this whole thing is like a balloon that's been blown higher and higher and higher and higher, and you poke a little hole in it, and they're still trying to blow air into it to keep it from going, but heaven forbid it starts to deflate, the whole thing collapses upon itself, and that's what they're afraid of.
Well, it is, and it's since 2008 when we started really doing quantitative easing, and you can say we can go all the way back to 2000. They started doing things, and you might even have an argument to go further back, but really in 2008 we started doing things that overinflated the market. We put a lot of cash into it. We tried to bring it all back from the brink. And at the end of the day, we just created a lot of bad habits. They took off a lot of the banking laws to keep the banks alive. They should all be shut down today if we went by the same standards of 2007. Right. And so this brings me to my first question I do want to ask you, Andy, and then I do want to talk a little bit about BRICS too, because there are some things there that I definitely want to hit upon. But this is something that's got me kind of uneasy too, right? We've got the stock markets having some issues. It's been super high. PE ratios are out of control. Earnings, if you have a little glitch in earnings, all of a sudden things are crashing down versus they used to go up or down, up on bad news and good news. It was crazy. But what really concerns me is the banks and watching the banks very closely. So Andy, since the Lindsay Bank closing, it's been kind of quiet. Do you hear anything about the banks right now? I know they don't have a lot of liquidity. I know that the Fed continues to shore them up by changing the rules and kind of kicking the can down the street. Should we be worried about banks, or are we out of the clear here?
Well, there was the Pulaski Savings Bank in Illinois that failed earlier this year, said it was fraud related. We haven't seen any. That's been the first here in 2025. But the one in Lindsay was bailed in, which is a scary thing. There's over 60 plus banks, I believe, on the troubled bank list that more or less says if things don't change, they'll collapse. I think we have definitely not heard the end of bank consolidation, bank failures. I think keeping more than the FDIC limit at any bank is as dumb as a mud wall. And I say that with respect to those people who haven't really understood what a bank bail-in is. But ask the folks in Lindsay, Oklahoma, where half of their uninsured deposits are gone. And that means you have $1 million in a bank in Lindsay, Oklahoma, 250 is insured. That leaves 750 uninsured. Well, they were given half, and they're not even supposed to get that of the uninsured deposits because they only had 7 million in uninsured deposits, not the billions that Silicon and Signature had, including Oprah Winfrey's money and the tech startup money. But that means of that 750, they got 375, which means 6.25 They got 6.25 back of $1 million. That other 375, might as well kiss it goodbye. You're never going to see it again. And if you do, they have up to 4 years to pay you in the form of bank stock of the new stock, the new bank. And that's only if the assets match the liabilities for the reason they went out. Well, if you go bankrupt, typically your assets are less than your liabilities. So in essence, it's gone. The law says that anything over the 250 insurance limit is gone. So, they can consider themselves lucky. But no, I think that the banking problems have not gone, and they're so systemic to one another. You see a good-sized regional bank collapse and bailed in, it would create a run on the banks overnight. So, it's no longer doom and gloom and supposition. It's happened. It's happened very quietly, and the media does, as usual, a horseshit job of telling us about Bank of Lindsay, Oklahoma. You ask any of your friends out there, no one's heard of it, but try and find it. It's even hard to find. Go to the FDIC website, you'll find it, and then Google Lindsay, Oklahoma bank failure, and you'll find a little article from a regional Fox News channel that talks about it, but it wasn't center stage like Silicon and Signature who were illegally bailed out. So everyone thinks, yeah, the banks get bailed out. No worry, everyone got their money back. Well, bullshit, and wait till a big bank fails in a very, deep recession where loans aren't being paid back. And that's another reason he probably wants rates to go down, because if rates continue to move higher on the 10-year, you're putting greater and greater and greater strain on these banks who once again went back into the water and making the same mistakes again, buying fixed income treasuries, figuring that they can't go any higher, right? Well, they have been. So I guess we'll see. But no, I'm not convinced that the banking problems are behind us, not even a little bit, actually.
I don't think they are. And I've been waiting to see, does the Fed like the banks or not? And that's an interesting question I pose, because the Fed's there for the banks, right? Or is the Fed there for the large banks? But in my opinion, everything consolidates. All the markets have been consolidating. Banking's one that we still have like 4,500 banks out there. It has not really consolidated as much as our airlines or our telco companies or healthcare providers, a lot of these other things that are out there. And it seems like everything starts to consolidate at some point. So I imagine at some point we're going to see a handful of banks, and that's what's out there. Maybe a handful of credit unions too. But I'm waiting to see, are they going to continue to shore them up, which would mean start lowering rates pretty soon to keep the banks solvent, or are they going to hold these rates and maybe fight Trump? And we get a little bit of an internal fight going on here with the Fed. So I'm curious to see what ends up happening there. Now, shifting it just a little bit, Andy. And one thing I just want to remind everybody, hit that thumbs up if you guys haven't. That lets everybody know that we're live right now. That's more important than when you just have a regular video. It kind of keeps it recommending to more people while we're going. It kind of leads me to my next question on this too, which is the BRICS. We've talked about the BRICS a lot over the last year that we've been chatting, and I haven't heard a whole lot of anything about the BRICS. I've heard a little bit about potentially a gold revaluation, Senator Loomis's bill. There's talk about that being able to revalue the gold, maybe to current prices, maybe $5,000, maybe $10,000 an ounce. There's different ramifications based on what number gets picked and if they do it. It makes sense to me to do some kind of a revaluation. Having gold sitting at $42.22 doesn't make any sense to me at all. And then all of a sudden we have all this money starting to move in from the LBMA to New York. And, there's a lot of questions circling around. Do we not have the gold in Fort Knox? Do we not have it in the vaults with the New York Fed? Is it not sitting in West Point? Is it not sitting in the Denver Mint, the San Francisco Mint, wherever we may have it in other storage facilities? And are the banks hurrying and trying to put the gold in there so that if they do an audit, they can find it? And the reason I bring all that up with BRICS is Donald Trump early this year said to the BRICS, "Don't you dare come out and have a gold-backed currency. And if you do, we're going to give you guys basically 100% tariffs." So he's obviously worried about the BRICS. Someone in the United States, either the federal government, the banks, or the COMEX, someone's worried about it, or JP Morgan Chase is worried about bringing the gold back in here. What do you think's really going on?
I think the BRICS are quietly continuing their union, much more opaque than transparent after the BIS, Bank of International Settlements, who had been instrumental, their innovation hub in developing Mbridge at the 12th hour, pulled out of it after it was fully operational, saying they can't be party to a group of countries that where one of them is being sanctioned by the West. Well, or more, and they just realized that Russia's the R in BRICS, and that was espionage in my mind. They spent 4 years developing it, Chinese technology, the innovation hub of the BRICS, and screwed them at the 12th hour. We just saw yesterday or the day before Iran, China, Russia doing joint naval exercises. We've seen Indonesia become a full member of the BRICS, have the largest nickel deposit in the world. They're continuing very quietly their expansion, and when Trump says, if you guys do this, we will slap on 150% tariffs and not do business with you, that's the wrong signal. That's the reason that these countries joined together in the first place. Those are not tariffs, those are sanctions pretending to be tariffs. So no, I think indeed they will continue to find allegiance with one another, to find safety in numbers with one another, to be less than transparent with the West, but continue to forge an alliance and to build strength through the unity that they have, and using gold really for now as their de facto common settlement. They'll trade with local currencies with one another, but any imbalances in conversion rate or in excess in trade imbalance will be settled in gold. And that's kind of the premise of the BRICS unit currency, which is a settlement currency, which Delma Rousseff told us that they've agreed to in principle. So, no, I think what Trump is doing with BRICS is the wrong thing. In fact, he should be extending the carrot, not the stick, as we've done that far too much. And, starting with weaponizing the treasury market against Iran and Russia, not the right thing to do. It's not up for us to make these decisions. As I've said on your show before, we're still in Iraq 20 plus years after invading their country under false pretenses, destroyed their country, toppled their regime. And here we are still there, including sanctioning their banks for trading with Iranian banks to buy liquid natural gas after 20 plus years. And all of their oil revenue that they make, we hold in the New York Federal Reserve. They can't even control their own finances. So this is not up for the world reserve currency, where many of the countries in the global south view us as worse than Iran on many levels, just holding ourselves to a holier than thou attitude. Now, this is, I'm not saying I feel this way, but I'm telling you they feel this way. And if you don't understand how they feel, then you're not paying attention to why these things are happening. So we can go around and do these things because our shit doesn't stink, but they can't, right? And I'm not making a declaration on who's right or who's wrong with the Ukraine-Russia war, but Putin can't protect his own country's interests. So we're going to take $5 billion of your treasuries that we're holding for you and give it to the Ukraine in the form of weapons. No, that doesn't work, especially when we invaded Iraq under false pretense. Look what we did to Libya. Look at what we've done in Syria, all these things. And yet there's no repercussions against us. So look, I'm a patriot. I love this country. But let's just be pragmatic here and think of how the rest of the world views us. They would be like, screw you guys, right? Like, and I'm not going to trust you. If you'll do it to them, you'll do it to us. So let's just be real quiet about it now, because the BIS fucked us at the 12th hour. Pardon my French. I just want to get my point across here that these countries, the BRICS, if you look at the announcements that they made during the meeting in Novograd, they said things that astounded me. Right before the BIS pulled this crap on them, they said, look, we want to be part of the BIS, Bank of International Settlements. We want to be part of the IMF, the International Monetary Fund. We want to be part of the WHO, the World Health Organization. We want to be part of the United Nations. We just want it all reworked to make it more equitable. I couldn't believe they were saying this stuff. They wanted to do it and be a global community. They just wanted to have the same type of treatment that the West gets. Well, then the West does this. Now, the BIS is a Western institution, and to pull out after helping develop Chinese technology, and with the understanding of it being integrated into Project Cedar and Project Agora, the West form of the CBDCs, which have now been scrapped, they're all going to get together and live one harmonious family. they would then have the ability to not be so reliant on the US dollar, but still integrate into the system. Well, we screwed them. So now they're like, oh, well, that's how it's going to be. So you're not going to hear a lot about it. You're not going to hear other than things like, yeah, Indonesia just became a full member. And then lo and behold, China, Russia, and Iran having joint naval exercises. Do you not think that that's significant? We're not hearing the day by day stuff anymore. And I wouldn't either if I were them. But I think you will see things showing strength. Look at Indonesia has the largest nickel deposit in the world. You need that for a green world. You need that for electric vehicles and all this kind of stuff. So they're showing signs of strength. They're showing signs of unity, but they're not going to show the continued gradual, unification or the way that they have been, because I think they realize that exactly what Trump is saying here now is exactly the reason that they joined together to begin with. And, fool me once, shame on you. Fool me twice, shame on me. And I think that's the attitude that they're taking. It will just unfold when it unfolds, and we'll figure it out as it unfolds, but not in the same way that we have been able to the last 3-4 years.
I agree. So it's interesting. We had a couple of people in here talk about, oh my gosh, it's politics. I'm gonna run. This isn't politics. This is economics, and it is. I mean, it's politics from the standpoint of it is political jockeying. It's not politics from a standpoint of a political party. When you have different levers, like having the global reserve currency, like the US dollar is, and then it gets weaponized, okay? Regardless of how you voted, how you saw that whole situation, the fact that we weaponized it and we used it to sanction another country puts their back against the wall to the point where they're going to start to do different things that are drastic. One of those is going to be, how do I get away from this dollar, because they can take them away from me.
Yeah, and I'm looking at some of the comments here, and it's not politics. It's not politics at all. This is reality, and and I am a patriot to the nth degree. I'm just trying to help people have an open mind, because it's like going to an attorney. You're falsely accused for murdering your wife, and you're falsely accused. And your attorney says, listen, I don't need to understand the plaintiff's argument. I know we don't need to worry about the other side. You just tell me your story. Well, if all we get is information from a Western media that has their head up their ass and doesn't tell the truth and lies to us for the last several years, completely lying to us, and openly, we now see that to be the case, then maybe we've been lied to about other things too. Maybe we should have an open mind and at least understand the reasons that these things are happening, the reasons that these countries are employing to make these drastic, once in a generation moves. So it isn't partisan politics. It isn't politics. It's reality. I voted for Trump, and I thank God that he's here and that he's doing the things. And there hasn't been anyone in this space that has been as angry about the things that we saw the last 4 years, the wokeness, the lawlessness, the breakdown in the judicial system, and the FBI, and the cancel culture, and the censorship. And, I am a product of meritocracy. I mean, literally, I come from nothing. Nothing. I've said it before. My dad's middle name is Miles. His friend who lent us $60,000 in 1989 to start a company in an office the size of a closet, middle name Franklin, before the internet. I'm the least likely person to have achieved what I have, whether it be in athletics where I excelled or in business where I've excelled. I was not the best athlete, and I am not the smartest guy. I outwork people. And it's because of the privilege that I have for being in this country and the opportunities that were given to me, and the ability to outwork people has got to me where I've been my whole life. And so I am a patriot. I am an American. But you have to realize that the people running this country have led us down a poor path. Not Trump, but the ones in the last administration, a very bad, dark path that the rest of the world has found reason to rally together as a result of. So, look, I think that I think this is something that you can stick your head in the sand, or you can realize that these are all real issues that need to be at least understood before we cast stones.
And a lot of the issues, Andy, if we look at it, I'll take this back to the late 1800s if you really want to look at where all this stuff started. And then it really hit home in 1913 when the Fed came in, the 16th Amendment, and we started the IRS, and we also started the income tax for the 1%, for the top 1%, basically. And all of a sudden now I am paying, close to 50% taxes here in California. And that's not how this country was supposed to be. That's not what it was founded for. That's not what anything was supposed to be. And so to me, it looks like, when we look at American politics, we continue to get closer and closer to this situation where the middle class is snuffed out. It's hard to get ahead. It's hard to, if you tried to do what, if your dad tried to do, if you tried to do today what you and your dad did back in the past with Miles Franklin, it'd be much harder to start that today than it was back then. My grandfather started the savings and loan. Good luck getting a bank chartered today. Go try to do it. It's nearly impossible to get it. I know Rick Rule's been trying to do it. I think it's Rick Rule. He's been trying to do it for 3 years on Battle
Yeah,
Bank.
he has. Rick's a good friend of mine, and he's had nothing but problems with the FDIC and getting everything set up.
And he wants to have his bank not fractionally reserved and backed by gold. Oh my gosh, what a great idea, but they don't want that. So when I look at stuff like that, I call BS on it. When we talk geopolitical too, what's important to understand is how's it going to affect you? If the BRICS comes out with a gold-backed currency before the United States does, versus the United States backs its currency with gold before the BRICS announces it, there's two different things that ensue, right? Like, Andy, in your opinion, what would happen if, let's say this weekend, the BRICS nation comes out and says we've printed a ton of units. So we've got the paper, we've got the digital, it's on it's on a cryptocurrency on a blockchain, and it's backed by 40% gold. What could potentially happen to markets on Monday if something?
That's a tougher question, because if it was the previous administration, I'd say all hell would break loose and the markets would collapse and gold would go to the moon. With this administration, you don't know what President Trump will do, and he's pushing back against it. He's only here for 4 years, so the thing about China, and he even said it, to Maria Bartoloma, we need to think more like China. We have to stop thinking quarter to quarter and think a much bigger picture, 100 years like they do. 4 years of them is nothing. So they'll lay the groundwork. They'll lay the foundation. And, I don't know. But I will tell you this, I've done an interview recently with Judy Shelton.
Okay.
Judy was Trump's nominee to run the Fed in 2016, wasn't confirmed. She advocates for 50-year treasuries backed by gold and stable coins issued off of them, all of it pegged to a distributed ledger technology, system where everyone can see it, transparency. That's what Zoltan Pozar said. Bretton Woods 3, a system will be about commodities and transparency. And she told me, she said, I think that he will issue them. I believe he will issue them July 4th, 2026. That's what he's told me, she said. And that's the 250th anniversary of this country. So the first step is to bring all the gold back. Well, we've become net importers of gold, right? And we tell the world it's because of Trump tariffs. That's not what it is. It's not the Basel III. It's not even the arbitrage. All three of those things. Look, Basel III regulations go into effect July 1st in this country. That's the banks, if they want to call it tier one, has to be unencumbered on their balance sheet, right? And then offset with a long position or a short position in London, basically, which is nonsense. It's all paper nonsense anyway. But they want to bring the gold back, and they've imported over 25 million ounces of gold since November. Pretty damn close to that, at least that we know of. And she says, look, if they're going to do that, think about it. If they're going to do that, let me just deviate for a moment along this line.
Do it. Go for it. Yep.
There is a rumor going around, and I can't substantiate it, but let's just talk rumors, that Trump is doing this to screw the Bank of England and to get back against Europe. Now, if you look at what the German Bundesbank just said yesterday or the day before, let's see if I can find the actual article here. I don't know if I can, but let me see. They basically came out and said that they're expecting a weaker dollar, They are expecting, let's see if I can find it because it's really important if I can. Let me just give me 10 seconds here. Because they're saying that, two fundamental things have changed. That the protection of Europe is no longer on the United States appetite, that we're not going to protect them the way we once did. And you hear them all saying, we don't need you. Here it is right here. He says, this is out of Bloomberg. The U.S. dollar may lose its traditional safe haven status as global markets adjust to a new geopolitical order, according to Deutsche Bank AG. We do not write this lightly, but the speed and scale of global shifts is so rapid that it needs to be acknowledged as a possibility. And this is the head of Forex trading for the bank. He said, it's hard to overestimate the scale of change taking place in global economic and geopolitical relations in a matter of days. Bringing it all together, we are starting to become more open-minded to the prospects of a broader, weaker trend unfolding for the dollar. He said, two pillars of America's role in the world are being fundamentally challenged. One, the U.S. security backstop for Europe. Two, the respect of rules-based free trade. The rumor is that he believes that the European aristocrats were not only involved in trying to rig and ultimately rigging the election against him. He believes that. And number two, that they were involved in this color revolution, that everything went to hell upside down in the wokeness and the overthrowing of the American culture and the destabilizing and the fracturing and the ununifying. We've all become, very, very angry with one another, and we're not a unified country any longer. And that's what Trump is trying to bring back. The rumor is that he and Powell are in cahoots, Trump and Powell, and that they are going to strike back against Europe. Well, you hear the head of the Bundesbank saying, well, they're not going to protect us anymore, and they're going to issue tariffs, even though they have tariffs on us. He just wants to equal the field. And so the rumor is that it started with and Tom Luongo talks about this, of Powell pulling SOFR or LIBOR, canceling LIBOR and going to SOFR. So instead of the European banks controlling the interest rate structure of the world, it's now the U.S. based banks. And then secondly, that he's trying to blow up the Bank of England by the U.S. banks going long and leaving the European banks short on a fractionally reserved system in Europe. And if you look at, for example, in London, they have 279 million ounces of gold on paper, of which only 36 million are available. That means of the 279, only 36 million is not spoken for by entities like ETFs or the Bank of England. And they have that 36 million sitting against 380 million ounces in spot contracts that could stand for delivery. So they're almost 11 times more paper than there is physical. And in silver, it's even worse. There's 270 million ounces of silver. They call it the float, and they're trading 2.9 billion ounces of silver per day, 3.5 times the annual global mine supply. So what's been happening? The single biggest monthly outflow in the history of the LBMA in silver just happened this month, 70 million ounces by, and they have drained all this gold that's been coming out. And originally it was called the Trump tariffs. They're lying about that. They're trying to make London think, yeah, it's just exchange for physical. It'll come back, because they have something called exchange for physical, where you can take either an LBMA contract or a COMEX contract. They're both fungible. I'll take the COMEX contract. I'll give it to the bank in London. They'll get the cash. They send me the metal. Well, London is a T+1 settlement, meaning you make that trade on Monday. By Wednesday, the metal should be on its way to you. T+1. T is Monday. 1 is the settlement day. Tuesday, Wednesday, the metal is available. It's now T+8 to 9 weeks. It's a default. Even though they've delivered all of this gold since November, now they're like, oh, shit. Maybe this isn't just tariffs. Maybe this isn't what we think it is. They are trying to perhaps expose the frailty of a rehypothecated scam that they've been able to perpetrate on all of us and the miners and everyone else for a very long period of time by overwhelming the leverage with paper. 90% paper, 10% physical. No one stood for delivery. Well, guess what? Now you're seeing massive deliveries. to the point where we've seen the largest delivery in the history of the COMEX market ever on the February contract of almost 6 million ounces, surpassing the previous high by 1.2 million ounces. We saw JP Morgan deliver 4 billion in gold for a customer to the COMEX in February. Who's that customer? Who's got $4 billion to buy? And then again, the largest single monthly outflow of silver, 70 million ounces. Boom, goodbye. So all of a sudden, the LBMA like, oh shit, we have a problem. They're trying to tell us it's trucks and manpower. Not enough trucks, not enough manpower to get. Oh, really? It takes you 9 weeks, the Bank of England, to come up with trucks and manpower after you've already seamlessly delivered all this stuff? No, they've defaulted in essence, and they're afraid of what could really happen if one of these banks blows up, because they're massively leveraged. Now, the rumor is that the Western banks here in the U.S. have gone long, leaving those banks exposed, and Trump is trying to blow up the Bank of England. And because he's mad about all that they've tried to do to him, including, we're not going to protect you anymore unless you pay your fair share. And now we control interest rates, not you guys. And guess what? You guys are in big trouble if you think that you're going to continue to run this facade, because now we're going to become net importers of gold and silver. We're not going to tell you that what we're really doing. We're going to call it tariffs. And guess how close you are to blowing up the Bank of England and these banks. Now, is it true? I'm not saying it is. I'm just saying there's a rumor. All I'm saying is, and I'll equate this to what has happened in the last 4 years to all of us. If you do not question everything you've learned, nothing. You must question everything, because look, even if Trump's motivations are completely American-centric and pure, he can't tell us. You have half of the fucking Congress sitting down when a little boy who has cancer is given a Secret Service honorary award, and they sit on their hands. And as a father of 3 kids, if my daughter was murdered by someone in this country illegally, and half of the assembly sat down when they are giving her an honorary, whatever at that speech, I would have jumped over the railing and started hitting people. I would have thrown my shoes at every one of them. I would have started screaming 4-letter expletives, and every single one of them are treasonous in something's going in American first. And half of the country, half of the country's representatives didn't even have the courtesy to stand up for that family or the little boy. How just ridiculous has it become, and nauseating. So with that being said, if you have the media that finds a way to make that look ugly too, and not really speak about it the way that it should be, well, what happens if he was open about what he's trying to do? They would just blow the whole thing up. So his motivations, what we are being told, my guess is, are far from what is actually really happening. And I think you have to question everything you see. So becoming a net importer, bringing all this gold in, draining the exchanges, and then, people have said, well, do you think, like Roosevelt did, do you think gold will be confiscated again? Well, look, it always pissed me off that JP Morgan got to be the custodian of SLV after paying a $920 million fine to the Justice Department, the largest they ever handed out, for manipulating the metals market. But, it's BlackRock and JP Morgan holding the world's largest silver trust. It's been HSBC Bank that's been the primary custodian of GLD. Guess who's the primary custodian of GLD today? Oh, that's right. JP Morgan took over. HSBC only has 2 million ounces of gold in their vault in London. On behalf of GLD, there's about 30 million that JP Morgan holds. They are all but the entire primary custodian of GLD. So you want to talk about now the foxguard in the henhouse? Well, guess who's an extension of the U.S. government? Well, you could say it's JP Morgan. So they've hoodwinked the British bank into being the primary custodian of GLD. They now hold more gold in their 2 vaults, one in London, one in the U.S., owned and operated by JP Morgan, than half of the G20 countries. And they could come in and close those 2 funds tomorrow night, pay everyone their fair share, and have not violated any civil liberties or broken any laws. The prospectus doesn't allow you and I to take metal out of the ETFs. Only the big commercial banks that funded it. It's called baskets. Well, guess what? 19 or 16 million ounces or 16 tons. I forget. Let me see. I'll tell you. A huge amount. It was the amount that came out of GLD just recently was, bear with me. We have seen coming out of GLD in just 16 tons. Okay, 16 tons of gold have left GLD. Now, that's the same thing as people cashing out their shares. You get the talking heads on CNBC saying, well, that's people leaving gold. It's probably peaked. They're taking their profits and they're moving into NVIDIA or Bitcoin, the Trump risk on. Guess what's just happened to the risk on? It's got its ass handed to it. But that's not what it is. It's not profit taking. It's not moving to reallocating it. It's called share redemption by the big bank, JP Morgan, who can take those shares, go through the back door, give them to the custodian, and they are the custodian. They just redeem the shares for the metal, and to the market, it looks like people are selling out of GLD. No, 16 tons of left, and that real metal is being pulled out, and who knows what's happening to it. I mean, maybe that's what Trump said to Jamie Dimon. This is what I need you to do. Now that you're taking over custodian, let's just start to bring all this gold home, because most of it's been held in London, and let's use it for American interests. So could it be that that's what he's doing? Absolutely, it could be. I think it's far more than tariffs. Yeah. I think it's far more than Basel III regulations, and far more than playing the arbitrage, where at one point it was $80 an ounce difference between US and London. It should never be more than just a fraction of a percent. $80 more, so you could buy in London and sell in New York and capture that spread. That's what some people think. No, it's not. It's bringing it home because he's got bigger things in store for it. Like Judy says, collaring 50-year treasuries to gold. Well, you better have a lot of gold here, and then you're going to revalue it after the Western banks have got out of their massive short positions, and the European banks, which are still wickedly short, and gold goes to the moon. Oh, gosh, Houston, we got a problem. So could this be happening? Sure. But I think, again, question everything, trust but verify. And, to me, it's a whole lot more than just calling this Trump tariffs. It's a whole lot more. But he can't be honest when half of the country still has their head up their ass, period.
I agree. This one kind of gets me laughing, Andy. We need to hear what Jim Cramer says about gold, because if he says that the gold is there or it's not there, it's usually the opposite of what it is.
Jim Cramer is the ultimate, don't do it. Whatever he does, do the opposite. That's true. And look, silver right now, it's going to be closed. Looks like it closed at $33. So that's the line in the sand that they've been defending. Yep. Could this be the beginning of a run in silver? Man, it's long overdue. The little boy who cried wolf, the wolf does come. And yes, someone said, was it me? I was, to my knowledge, I was the first one to talk about silver having a 500 ounce amount of silver in the cone of a Tomahawk cruise missile, long before Silver Wars came out and John Forrest Little and all these other people talking about it. I talked about it 3 years ago in Vancouver at a conference, and I was approached by a man after the speech. Kind of freaked me out. I was like, yeah, I work for the DOD. And he's like, I helped design the Patriot and the Tomahawk. And he's like, I know there's some silver in it, but I don't think there's that much. Let me get back to you. Comes back, and I don't hear from him again. This is Jay Martin's Vancouver Resource Investment Conference. I've been there 3 years in a row. Last year, which would be the second year, he's there in the audience again. You remember me? Shows me all these pictures. You're right. There's between 13 and 14 kilograms in every Tomahawk, and lots of these other high-tech missiles. So ask yourself, why would 8 commercial banks hold the largest concentrated short position in any commodity ever traded in the history of the COMEX, that being in silver, the tiny little silver market? It's because they need to keep it cheap and off the radar so they can build weapons to fund wars all around the world. And, when we confiscate $5 billion in Russian Forex reserves, we didn't give it to them purely in cash. What did we give it to them in? Oh, yeah, weapons that they bought from who? The military industrial complex. That's owned by who? BlackRock. And who got all the reconstruction contracts? Oh, yeah, that's right. It's BlackRock. And so you look at who are all the weapon manufacturers? BlackRock owns them all. And so this is deeper than people have given any credit to. And BlackRock and the military industrial complex and all of these Raytheon and Boeing, all of these massive military companies that need silver to make aerospace, submarines, and high-tech weapons, they all need silver. This dude said to me, you are right. There are almost exactly 500 ounces in the cone. And, and then John Little and the Silver Wars guys have done a great job of showing how much silver is in other applications. I give them credit. But nonetheless, I think anything high-tech these days. Look, in 1942, there is S.2768. Google it. It's a congressional hearing where they say By next year, we will need 200 million ounces a year. Currently, it's 100 million ounces a year for war purposes. By next year, 200 million. In 42, for God's sakes. Well, how much more advanced are these weapon systems now? And they all need silver in the guidance systems and whatnot. So, yeah, it's this is why silver's been suppressed. But as I've said a million times, you can only suppress or manipulate a market by pushing in the direction it's going, especially for an extended period of time. Well, for a long period of time, no one wanted commodities. They just wanted US dollars and treasuries and real estate, and because that was safe and lucrative. And since 1982, since rates have been falling, been going straight up. Well, that's changed. And now, not only is there a drive to get gold and silver, which gold is the only other tier one asset in the world, but they've lost globally faith in the West, whether it be England or the EU or the United States. So all of these players are taking their toys and going home. Give me my metal. I don't want to leave it with you anymore. India just brought 100 metric tons home from the Bank of England that they've held since 1991. They're bringing all their toys home, not only from the US, but also the Bank of England. And this is no longer about we trust you. It's about show it to me. And that's where things get really interesting very quickly. So I think this will be a very interesting year, more so than people expect. I think it could be really, really kind of frightening, exciting, interesting to say the least. But that is a Chinese curse,
That is true. Okay, I've got one last question here, and then I want to show off some of your awesome packaging because I got some shipments in from Miles Franklin, and we're gonna talk about that for just a minute too. But here's the last question I want to hit on real quick, Andy. Francis Hunt said on Palisades YouTube interview, buy gold now till ratio 75 to 1, then change back to gold when it's 15 to 1. So maybe just some clarification on some of your strategies in the past that you've looked at with the ratio and how to play that a little bit. And I don't know, anything else you want to share?
Francis is a smart dude. And I think it's a opportunity of a generation. And I don't say that lightly. For 5,000 years, the geological ratio was 16 to 1, 16 ounces of silver to 1 ounce of gold. Even when Sir Isaac Newton was figuring out the relationship between gold and silver for the mint, I don't know how many 200 years ago, he used a 16 to 1 ratio. And once we hit the Industrial Revolution, largely because gold was money and silver industrial and storage and logistics, man's ratio moved to roughly on average for the past 150 years about 42 to 1 on average, sometimes higher, sometimes lower. The geologic ratio stood at 16 to 1. And silver, like your skin is epidermal, is found in nature in a form called your skin is epidermis. Silver is found in nature in a form called epithermal, right near the surface. Big deposits were found forever ago. I've had the good fortune of having dinner with Keith Neumeyer a few times and getting to pick his brain. And he said, man, there's only a handful of silver companies out there. Most of the silver that comes to market, about 75 to 80%, is byproduct of companies that are mining something completely different and stumble across silver. I said, well, why are there only a handful of silver companies? Because it's hard to find, and most of the big deposits are gone because it was, so close to the surface. They were found even before advanced imagery. And, he's like, what's real right now? It's 7 to 1. 2 years, 3 years ago, 4 years ago, no, 6 or 7 years ago, he told me 8 to 1. Recently, he said 7 to 1 to me. And so it's depleting in nature. And so at a 7 to 1 ratio, yet it's priced at roughly 85 to 1 because of the suppression on COMEX and the LBMA. It's the opportunity of a generation. Now, the first interview I did on podcast was with Big Swear in 2010. And he called me up and we were talking. He's like, man, it's 85 to 1. I said, shit, I just looked at that. And it looks like it's the second time as far back as I can go in history that it's been 85 to 1. I said, let's do a podcast. We'll tell everyone to sell their gold. I'll buy it and sell it to the market, and we'll switch them into silver. So in theory, in 2010, mid 2010, it's probably still out there, that YouTube, you'd give me an ounce of gold, I'll give you 85 ounces of silver. Now it depends upon what type of gold, what type of silver, but in theory, that's what it would be. 7 or 8 months later, in mid 2011, you had $50 silver and 19.15 gold. Now remember, the average price for the 150 years is 42 to 1. Well, divide 37 into 1915, you get 37 to 1, not 42 to 1, 37, just past its 150-year average. Still 6 times higher than it's coming out of the ground at. But so if you would have traded me in mid-2010 an ounce of gold and you got 85 ounces of silver, 7 or 8 months later, you would have only needed 37 ounces to trade back into that 1 ounce of gold. You make 2.5 times what you started with nearly. And that's kind of where we are right now. And so silver is depleting and expanding. And the real price hasn't been really determined for years because the West has been suppressing it to make high-tech weapons, to be the most dominant superpower militarily in the world. And so maybe that's why India and other countries like Russia, China is the second largest producer in the world, and they're flying all around South America, namely Peru, and buying up all of the doré and concentrate, which is disintermediating the marketplace. No one knows how much they're buying. They're paying double what the West will and refining it back in China. Russia's buying it for their strategic stockpile, the first government to admit it. And India has bought 900 million ounces in the last 4 or 5 years. That's more than the COMEX and the LBMA combined. So do they know what's going on with you? Bet your ass they do. They know exactly what we're doing and have been doing, and they're using it against us. And the draining and the acceleration of the draining is a realization that now the jig is up. So everyone's trying to get it as fast as they can and bring it home. Hasn't spilled over quite yet into the retail market. It will. It's just that the retail market isn't being told what's happening. People don't watch you and I like they should. They watch ABC and NBC and Fox and CNBC, and they're not being told what's really happening by design. But yeah, I think that ratio of gold to silver is the play of it's the trade of a generation. If I said to you, look, man, we can do this. You give me your gold, and for you to double what you started with, all that has to happen is it goes back to its 200-year average, price average. And at that rate of 42 to 1, if it's coming out of the ground at 7 to 1, it's 6 times overvalued compared to its geologic ratio. And at what point, if you have to mine at a 7 to 1 ratio for an extended period of time, but it's priced at 85 to 1, when does that ratio, the reality of the math of it all, start to come into focus? You can mine it at 7 to 1 and sell it at 85 to 1 for perpetuity. You go broke in a matter of days. Well, at some point, the ratio in ground has to come in line with the price. The price has been fugazi for so long. When it finally is set free, who knows how high it goes. If you just took the price of gold today and divided by 42, I think you get about $7 an ounce. Well, how about divide it by 7, which is the geologic ratio? Now you're talking $400 an ounce. And that wouldn't be outlandish for me to say that. It's actually logical and backed by substance. It's just we've been brainwashed through the suppression for a long period of time into believing that silver doesn't have a future and just really cheap. And, you know, the counterintuitive nature of it all has made everyone say, screw it and go elsewhere. To me, it's the trade of a generation.
I agree. So just to show everybody real quick, this is the ratio. You're going to see it backwards there, but it's 88.57. And it got up to 92 a little while ago. So what Andy's saying, there's a lot of truth to it. It might feel like it's never going to go back down and that silver is always going to be manipulated and we're just stuck. It might feel like that, but everything has elasticity to it, including that ratio, and it's going to pull it. Eventually, it will pull it down. It won't be able to stay up with it. Samsung's coming out with a new battery for EVs right now that has 1 kilo of silver in it. The solar panels on people's houses are doubling the amount of silver that's in those. We don't have any disclosures from Tesla on how much silver is in a Tesla, but it's a lot more than an ounce. That's kind of the rumor that's going around is 1 or 2 ounces. I can guarantee it's a lot more than 2 ounces of silver that's in those. And we're only going to keep using more and more of it for industrial use. And then as far as military use, every time a Tomahawk missile goes off that has a monster box in it, it's vaporized. You're not getting that silver back. And we've got to be somewhere over $100, I would think, Andy, to even start considering recycling silver out of products. And even at that, it's still not going to keep up with demand. And then last thing I'll say on silver is I believe we're a little over 4-year deficit now on the amount of demand for silver versus how much is mined. And so the only reason that there's even silver for Tesla to buy or for Samsung to buy for these batteries is people like us selling our silver on the market. And why are we selling our silver on the market? It's because we think the price is going to go down it hasn't moved enough for us. You know, there's a lot of people in the community that bought in the 80s at $50, and they've been waiting forever to get break even, and that sucks. But I think we're going to surpass that. 400, I don't think is out of the question. And the other thing I'll throw in there too, there was a question from Joe in here around retail and stuff.
That Joe 419.
Yeah.
Joe 419 says Kitco's 32.93. Joe, that's the bid price. The ask price is 33.03. If you can see that, the bid is if you are selling. The ask is if you're buying. There's a spread on Comex between buy and sell. And now they're 33.04. But if you go to a website like, you know, some of these companies will list a higher spot price than I think it's at.
Yeah.
Like SD Bullion, who I think is a great company. I have not a bad thing to say about them at all. They're 33.16. Look at JM Bullion, another good company. Let's see what they are. They are at 33.21. Now let's look at Miles Franklin. Now Kitco is always lower than everyone, and I don't know why they do that, but I'm lower than everyone but Kitco. And I do that because that's what silver should be at. I showed it 30.13. You can see that. I don't know if you can see it, but go to my website, 30.13. So silver 33.13. Above $33. That's the line in the sand. You look at a long-term chart, they've been beating it every time it got above 33. One thing I've noticed over the last several years is that it will go up against a number, up and down, and up and down, and up and down. And once it breaks through, it just goes. And maybe this is it. We've seen that in gold. Now maybe silver's following suit. It's about time.
Well, I even saw the mining stocks this morning when I woke up and I had to jump on a phone call. By the time I got off the 30-minute phone call, I mean, we're talking everything had jumped up today. You know, I saw them get pummeled yesterday. I'm like, this is a good time to buy some more. So I only added a little bit to my position, and I'm still up even after that. But what I want to do, Andy, is real quick. I just want to show a couple things. I've got a live stream that I'm going to be doing on Friday. And I don't know if we got to 100 thumbs up or not, but if we did, we're going to do a bunch of silver giveaways. We got close to it. We're at 75. So we'll have to see what happens there. But I wanted to show off the packaging that I got from Miles Franklin. Okay. So I'm going to open this. We're going to find out what this thing is.
And if you look at what the return address is, do you see what it says?
Jim Kirk.
Fargo Iron Works, something like that.
And the Dakota Iron Castings.
Yeah. So, you know, we go out of our way to make sure that you all have privacy. There's no identifying markings on any of that. And if you shake it, you won't hear it. And
this one, right up in this
silver eagles. Look at that. You've been working out, I see. Bernard, I love that, brother. That's what I've been doing for 35 years. That's how you get ahead, man. Way to go.
So we're going to talk about ratios on Friday. We're going to open this stuff up too. But anyway, I've had a blast having you on, Andy, with this show and all the shows we have. Andy's been great to my family, helping my dad grab some gold and silver.
I enjoyed speaking with your father.
Yeah, he's a fun guy. I'll have him back on again. We'll talk about banking. He was a banker for I don't know, 30, 35 years or so. And it's interesting to hear from him because he's been out of it long enough now. He can't believe all the things that I'm telling him, that I'm reading to him, that are going on with banking. He just can't understand how any of that's like even possible. And anyway, so, and the thing I'll throw out is that the bank that he was with and that my grandfather started, we had the best rating of any lending institution in the entire country. It was all about customer service. It was about doing things like that. And that's what I found with Andy and his company. So I've got it kind of in the ticker down below, but if you reach out to Andy, info@milesfranklin.com, put in the subject. Well, you tell them, Andy, what should they put in the subject?
I mean, you know, I know some people don't like the fact that I don't publish all my prices, and someday we should do an interview and I'll talk about that. Why I don't.
Yeah, we could do that.
I'd rather, you know, there are reasons that benefit my clients that I don't. And you ask for that price list and we will send it to you, no obligation. We'll be as good or better than anyone in the country. And we'll still even be able to come off of those because it's printed twice a week. And so if there are things that are happening and you call it to our attention, we'll be as good or better than anyone in the country. And it's just the way that I want. The amount of fraud that goes on online accounts, I just wanted to distance myself for that's one reason, but there's a bunch of reasons. Send us an email at info@milesfranklin. Surfer sent me, Stacking Surfer sent me. We'll send you with no obligation. No one will follow up with you if you don't want to be on the price list. If you want someone to call you, put your phone number down, say, contact me. You have questions on IRAs or anything you've ever heard me talk about on this show or others. Every one of my brokers goes back to almost everyone goes back to childhood with me. And I mean, my friends, long before they came to work for me, but they all had distinguished careers ranging from private equity to buying and selling businesses to working on Wall Street to graduating from Wharton School of Business with masters in business administration, all sorts of very distinguished. And then they came here and they're family to me. They're my brothers and to the point where if long before they ever came to work with me, we were hanging together. And so they treat this like their family. So any questions that you have, ask them. We'll reply. If you don't get a response quickly, check your spam. 1 out of every 10 will go to spam because it's coming from a corporate server into some emails have more sensitive spam filters and can go to the junk box. Check that. If you want to be contacted, put your phone number. If you just want the price, let's ask for it. And we go out of our way. We try our very best to make sure that everyone is taken care of. And where we're heading, Jared, I really think that having relationships matter. Now, you can take that to whatever degree you want. Our new website.
Totally, community, I think, is one of the biggest things that everybody should be building, local as well as national.
Yeah, man, 100%. 100%. So info@milesfranklin. And I love you, Jake.
Jake's awesome.
He's one of the greatest guys ever. I've had the good fortune of having dinner with him and his wife, and I think his kids were there too. And he's a solid guy. And I appreciate you, Jake. Honest to God, I truly do.
And now my mailman thinks I've got a lot of ironworks coming in.
Yeah, man. Well, hey, that's fantastic. And I appreciate that.
It's awesome.
I love doing these shows and I try my best, man. I read and study nonstop so I can at least provide a service to the community. I'm doing the best I can. And, no one ever said that in my mind that running a business and doing the right thing have to be mutually exclusive. And, I'm proud of the business that I built for 35 years as a dude who never graduated college. I was a jock, went to school to play baseball and hurt myself. And here I am. And I don't know how it happened other than hard work, but I love the community and got to meet great people like you. And we take it very seriously, very, very seriously. So it's an honor to be here and to talk with you and your people. And it's an honor to be listened to.
I think it's awesome, Andy. I've
whatever. I don't need to go. I'll get off my soapbox. I just appreciate you.
I've learned a ton in this process. I mean, the 24th of March, I'm going to be doing a big live stream. If you're available, Andy, and I'll send a note to you and to your assistant to check in and see if there's.
So let me look. I think I'm gone, but I might be. Okay. What time are you doing it at? Because, wait.
I think
I am in town. I'm visiting my daughter in Spain. She's spending 5 months abroad studying.
It'll probably be pretty late. We're going to be doing it from about 2 to 5 Pacific. So from 5
to 8.
I'm
free that day. That's Monday. I leave on Wednesday. So I think I'm available. So let's give it a shot.
If you're available, we'll have you on. If you're not, maybe we'll do a little quick pre-recording.
No, I should be.
Okay.
I should be.
So that's my 2-year anniversary of doing the channel. I've been stacking heavily for about almost 5 years now. I was introduced to all of this when I was a kid with my dad. He would go by the bank and he'd pick up whatever silver change someone had turned in, and he started collecting that. Plus, he knew the value of gold and silver. And now I've got the opportunity of going back to my dad now and trying to help him get better product. And so, one of the things that I look at, guys, too, and Andy's mentioned this too, and I don't know if you still have the special going on right now with the pre-33 gold or not, but there's times and places for different product. you got to look and see if it's on a lower price or a higher price relative to what it normally does. And then there's also the ratio of gold to silver that can help you make your decisions. But there's reasons to buy one or the other. There's reasons to buy both. And it's been a great community and, figuring all this stuff out. So Andy, I thank you for all the help and the wisdom that you throw out there. And there's very few people that do the circuit that you do. I can think of maybe 5 or 6, and you probably get in 3 times as many videos as they do in interviews.
Yeah, it's exhausting, man. Right. It is, but I mean, it's an honor. And if you come from nothing like I did, the hardest part of my existence is knowing when to shut it off. And I don't say no to people. And it's a blessing and a curse, right? And it is. It's a blessing more than a curse. It's a curse because life keeps on moving outside my office here, and my kids are getting older, and so am I. So, but like, I've been doing this for so long, I would have only dreamed to have the opportunity to see a market like this, to have the opportunity to talk to the world like this. So I'm not going to have any regrets when I'm older, other than, maybe I should have taken it easy a little bit more, but hey, that's not in my nature. So I appreciate that. It's a labor of love, and you're one of the good guys, brother. And like I said, I'm always happy to come on.
Well,
so I'll be on the 24th.
On the 24th, I'll tell the story of how we met and what I did to meet Andy and to get him on my channel. And I actually didn't need to go to that extent. I probably could have called him.
Yeah, you could have 100%, but you know what? Whatever. It's all good. I appreciate you, brother. I will look forward to picking up where we left off.
Sounds good.
I am in Canada this week. So heading off to go do a conference with Jean-Claude, another one of the good guys, and BRICS will be there, and Cliff High, and spend a little time cavorting with those guys. Back on Monday, the 17th. So I should see you same time next week if you have an opening. If not, we'll see you on the 24th.
Yeah, I think we're going to have to be in the
year, man. You deserve it.
It'll be in 2 weeks. I'm actually going to be out of town next week, and I'll be, well, if I get a window, maybe. Let me put maybe. If I can get a window, we'll do maybe a shorter live stream. But what I do want to do, Andy, when we come back on for not the 24th, but the next time, if we do it next week or the week after the 24th, I would love to talk a little bit more about your baseball collection. And I've been hearing rumors about your baseball history. Now, I don't know how much of that you want to share with us or not, but at least your love for it would be great. And it would be awesome to also understand a little bit more about Miles Franklin and what sets you guys apart from.
Right on. I look forward to that.
So I'd love to do that.
My baseball card collection, if you can see it, like right there. I don't want to. That's my pride and joy, man. I spent a long time building that thing, man, and I got every Mickey Mantle. I got all the Babe Ruths and Cy Youngs and Ty Cobbs and Lou Gehrig, Joe DiMaggio, you name it, I got them. And I started doing it many years ago. I would write in our newsletter, if you own baseball cards, send them in. I'll buy them. I'll trade you gold and silver for it. And I became a power seller on eBay way back when. I would have boxes to my ceiling, people your grandfather's age sending them in to me. And I get more enjoyment out of those than anything I've ever owned. And happy to chat about it at length down the road. And
it would be awesome. And I'm going to be in your neck of the woods in April. I need to find the exact date and message you, but I'm going to be not too far from where you're at. So
do you golf?
I do golf. I do not golf at the level you're golfing at, but I do golf.
Doesn't matter. Do you drink beer and golf? We'll have a great time. So yeah, man, I'd love to have you. We'll go out to dinner. We'll play golf if it's in the cards for you. And, come on over. I'd love to do that. And bring your family. Let's do it.
We'll do it. All right. Until next time, everybody, peace out. And Andy, are you on tonight?
I am on tonight with Kevin. We haven't done it in a while, so that's in 90 minutes.
Okay, 90 minutes. I'm going to let Andy go to get ready and everything and have some dinner and stuff. So until next time, everybody, peace out. Go check out Andy tonight, and we'll talk soon.